to talk to
anybody. Hello, everybody, and welcome. We have a nice full house. And Brian, we haven't hosted on one of our breakfasts for years now, right? Last time it was in person.
I miss you.
I missed it too.
I always miss you, Brian.
I miss you too, Brian. And I missed the boat, but we won't talk about the boat.
We won't have to talk about the boat, though I just had lunch at the yacht club the other day, so I couldn't help but talk about the boat.
That's another story. But I'm Bonnie Halper. I write the weekly Startup One Step newsletter, and I work with founders, helping them with their pitch decks, which you all get wrong, and making introductions to investors where and when appropriate. Yes, I'm a pitch deck doctor. A deck doctor. We host these every 2 weeks online with a different investor each time and a self-selected group of entrepreneurs. And I want to thank Joseph Katz for hosting us. Joseph, you want to tell us what you do?
Thank you, Bonnie. Good morning, everyone. Thanks for joining. I see a lot of familiar faces, which is always fun. So I'm Joseph Katz. I help companies go from unknown to well-known. I help build marketing plans and strategies and help take companies to market. So early stage companies and even some later ones. So happy to chat offline. I'll put my contact info in the chat, and everyone should feel free to do the same. Looking forward to today's conversation.
So Brian and I have known each other since the days of Web 1.0, the early days of Web 1.0, actually. Now, Brian, we always, as you know, introduce everybody or go quickly around the room and have them introduce themselves. And it's up to you whether you want us to do that first or if you want to talk about yourself and your background and get your latest fun, which is not so new anymore, but up to you.
Who are you starting with?
Oh, do you want to introduce yourself first and talk a bit about your background, or do you want us to go through the room and have everyone?
No, I wasn't sure if you were pointing, at me. I can't see your hand, so.
Oh, I'm sorry. You.
Right.
So up to you whether you want us to have the attendees introduce themselves, or if you want to.
No, I'd rather have the attendees start first. They're more important than me.
Oh. So I'll just go down the list. Faye.
I knew you'd start with me. Good morning. It's wonderful to be here and to meet all of you. I'm Faye Shapiro, publisher at Compro.biz, B2B digital media platform. And we're a source of resources and tools for startups. But in this context, I'm also the publisher and event organizer for the second Metaverse Pitch Fest. And I'm happy to share that in the chat. We are doing this working with Gus. David Rose is a keynote, someone Brian Cohen, I'm sure everyone knows very well.
My best friend.
And this is going to be in December, so welcome. And thank you for inviting.
And yes, please put in the chat. Nicholas.
Sorry, couldn't get my mute off fast enough here. Nicholas Rufa. I was on the one a couple of weeks ago. Very interesting and glad to be part of these. Interested to hear what Brian's got to say. Kind of in and out of startup world myself, working as a contractor now in corporate, but I have a couple of ideas that I'm still brewing and hope to, make these connections and do something with them soon. Thanks.
Evan.
Yeah, hi, Evan Spiro. Good morning, everybody. Speaking to you from Israel. And I'm the founder and CEO of Vector Photonics. And we're developing a autonomous room where you walk in the room and the computer system knows everything it needs to know in order to be able to operate all the room devices in order to make you happy. So it's a high impact investment opportunity. It saves lives, saves the environment, and it's a lot of fun.
Oh, thank you. I have to have Joe Milan introduce himself. Joe, are you there? And I know you're not shy.
Fumbling around, the old guy lurch for finding how to unmute yourself.
That helps.
Brian, I love those opening comments because I am cursed with having to give context and background to explain what I'm doing today. And that's it, but I do believe it is relevant because if you're going to try to do something ambitious, you have to a certain degree, paint a picture of why you even think you have the ability to do so. Prior life, ran a multifamily office, was the top large cap core manager in the United States for 13 years. through both bubbles as measured by two independent databases, Wilshire and PSN-EFRA. Very process-oriented. We did our own securities analysis, but I wasn't a stock picker because we architected a process to execute a disciplined investment strategy to deliver repeatable alpha. Well, that is the background that we're bringing to what we're doing today, which is building a platform slash solution slash middleware. I don't know what buzzword to use, to bring the same level of investment process rigor to how we fund startups so that entrepreneurs have a lower cost of capital, more efficient access to capital, regardless of location, profile, et cetera. And investors in startups can have more confidence there will be repeatable alpha. They're not just in a gambling casino.
I'm going down my list. Janice.
Good morning, everyone. I'm Janice Chokri. I'm the founder and CEO of Towsey Brands, which is the reinvention of the pillowcase to support your head, neck, and back. We all need not to buy multiple products, but just to have one. I'm also an executive producer of a new TV network called Caregiving Worldwide, and I just got back from Florida, where I directed and produced our new TV show called Safe and Sound Adaptive Concepts for Vibrant Living, which is products for people to age safely in their home.
Oh, cool for you. There's somebody here you should talk to.
I've talked to him. Yep.
Oh, okay.
Thanks.
Natasha.
Good morning, everyone. My name is Natasha Norris Standard. I am the CEO and founder of the Standard Footwear. We manufacture military-grade combat boot size for the female foot. I started this after 20 years in the military. I started in 2019, and you get addicted to being a startup founder, but it's the hardest thing I've ever done in my life. I'm glad to connect with everyone.
And by the way, she spent 20 years jumping out of planes, so that's a big statement there. Robin.
Oh, hi. Hi, everybody. I'm Robin Schaefer. I am a evangelist for how startups can leverage industry analysts such as Gartner, Forrester, IDC. And I bring that education to the startup world, and I help startups benefit by those firms without spending money.
Oh, thank you. Sandra.
It's amazing.
Oh, you're addressing me, right?
Yes.
I had to ask because it's actually Sandra.
Oh, Sandra, I'm sorry. It says A.
50-50 shot. First, I have to thank Joseph Katz for inviting me. I'm glad to be here and hearing some wonderful companies so far. My company exists because it helps other businesses to get a good foundation in their marketing strategies and then bring in all the pieces that fit the puzzle, including video marketing strategies. So I'm here to hear more and learn.
Thank you for being here. Steve.
Hi, good morning, Steve Berger. I apologize, I'm having some video issues, but I'm co-founder of Aided, which is a startup venture focused on providing comprehensive monitoring for health, safety, security, and comfort, all from one platform and one app, as well as concierge services to help families keep their aging loved ones in their home as long as possible. And appreciate being here this morning.
Oh, there's another guest for you too. Stuart.
Hi, I'm Stuart Silverman. I'm the CEO and founder of Becco. Taking the bait from Brian, I come from a long line of retailers. I've been in the retail industry for forever. Did work with some really early startups, and was really upset when all these brick and mortar stores were closing, and came to the conclusion that it was because people were getting lousy customer service in the stores. And so what we did was created the first real-time in-store customer feedback app that allows shoppers to be able to rate the performance of the individual store associates who help them, and then use that data to help them provide great experiences and to recognize them for their achievements.
Amy.
Hi, good morning. I'm Amy Levine, founder and CEO of Seed to Stone, a lab-grown diamond jewelry brand selling direct to consumer, attainably priced with 25% of our styles under 200, sustainably produced using recycled metal and lab-grown diamonds, and styled for the next generation so that they can enter diamonds at entry level well before engagement.
Thank you. Boonmi or Boonmi, I hope I'm not butchering your name.
Hey, good morning. Yeah, my name is Boomi. I lead marketing and retention at a startup called Quip and advise founders on their marketing strategies.
Oh, thank Christopher Kreisman. Always good to see you. Oh, you're muted.
Sorry. Yes. Always good to see you as well, Bonnie. And it's also good to see Brian. It's been a couple of years, or several years since I first met him. Definitely don't think he remembers me. But anyway, I'm Chris Krachman. I'm a serial entrepreneur. I think I started my first company when I was 10 years old, putting up Christmas lights, and did that for 22 years. Was a professional bodybuilder, owned a meal program business, daily deliveries back before they were a thing from 2008, 2012. Owned some franchise businesses, about 8 locations. And basically what I am is an owner operator, and I have a new company that I've been working on for the past, let's say, in R&D for 8 years. It's called Wellville. And we seek to improve human interaction and communication by giving people an alternative to bars, nightclubs, restaurants, and give people a way to learn how to communicate better.
That's certainly needed. Now we have the Daniels. Daniel Freed.
Hey, good. Filled up at the 93. Yeah.
Just have to unmute myself. There we go. Can you all hear me?
Yes.
So I am owner and founder of Specialty Metals. Specialty Metals recycles from all different types of industrial usage, rare earth metals such as iridium, ruthenium, on and on and on. And Joseph Katz has developed our company through the years so that we are found all over the internet, all over the world actually, because of him. And anyway, now I'm working with my son-in-law on a new startup using artificial intelligence, creating pre-authorization letters to insurance companies and also revenue cycle management companies using AI. My son-in-law created a startup and was in 18 months got bought out by a publicly traded company for huge sums of money, and AI seems to be the path of the future. We're working on that, incorporating that into our metals operation using artificial intelligence and taking away customer service, if you will, with AI to hopefully.
We have to keep them concise because we have a lot of people and we want to hear from Brian and I don't. Okay, thank you.
Yeah, so that's about it. Yeah.
The other Daniel Greenblum.
Hi, I'm Daniel Greenblum. I'm the founder of Catch, where we are building tools to protect individuals from cyber scams. So our first product to market is going to be an email detection in real time for users, powered by AI, but also a lot of database logic. After an experience where a family member got fell victim to a cyber scam. So excited to be here. Thanks for having me.
Thank you. Deborah.
Hi, everyone. I'm Deborah Lee, and I am the co-founder for Debonair Consulting. I work with Bonnie Helper, and together we work with founders to get them ready for funding. We do their executive summaries and pitch books, and we introduce them to our networks of investors. Nice to meet you all.
Thank you, Deborah. Heather Nickerson.
Hey, good morning. Thank you, Joseph, for inviting me. This is my first time here. My name is Heather Nickerson, co-founder and CEO of Artifacts. That's ARTIFCTS.com. We are a technology platform, patented technology platform that lets you capture, preserve, and share the history, stories, and value behind all of your stuff. We are a proud member of the AARP Age Tech Collaborative, and we're also just won a grant to do research in brain health with UMass Medical School.
Oh, thank you. Ian Germaise, who's the unofficial co-host because he's here every week and we're always happy to see him.
Hi, everybody. Happy to be here. So I live in Toronto. I am the COO of Virtual Film School. So we are an online film school. based mostly in Hollywood and London, UK. And we've been signing quite a few deals in Asia, upcoming in Africa, and now Turkey. And also signed a deal with a large educational platform in the US. So Faye, I will be probably getting in touch with you because we are also a metaverse company. We do use VR in some cases. So I'll be getting in touch with you.
And I'll put in the newsletter as well. John.
Good morning, thanks. My apologies, probably to leave a little bit early. So John Donovan, 20-some years in applied learning science, commercialized learning science research funded by National Academy of Sciences and National Science Foundation, Fortune 500 companies all over the world, large government agencies. And what I'm founder and CEO of a company that has a platform that allows people to commercialize their knowledge in collaboration with private communities. And then on the backside, analyze that information to figure out what their audiences know and don't know. So those are private communities inside organizations or brands or large companies. Thanks.
Ken.
Sorry, it's me. Yeah, good morning. Ken Deering, CEO of iGuard Home Solutions. We have an age tech solution to allow older adults to safely continue cooking even when they're impacted by cognitive memory issues. And morning, Heather. We're both members of the AARP Age Tech Collaborative also.
Oh, wow. Rob Eden.
Yeah, hi, my name is Rob Eden. I'm the founder and CEO of Panoram. So I have a social media, social commerce background, and we developed a social commerce marketplace that basically helps brands and influencers connect to each other and also create great content together and give the influencers the monetization that they need for their postings. So thanks for having me. Great to be here.
And feel free to ask questions when you're ready. Well, when we start. Steve Berger, we have a few more. Did we do
Hi, yeah, can you hear me?
Yes.
Yeah. Hi, yeah, Steve Berger. I'm a co-founder of Aided Inc., which is a provider of comprehensive monitoring for health, safety, security, and comfort, all from one platform and one app. And then we also have concierge services to help family members keep their aging loved ones in their homes as long as possible.
Okay, sorry, the names keep, Steve Schreiber keeps popping around. Steve, oh, you're muted.
Steve Schreiber, good morning, everybody. I appreciate being here. Work with startups and small to mid-sized companies. I design customer operations from scratch. I also work with companies on their customer experience and customer lifecycle issues and workflow problems.
Oh, thank you. Sarah, are you able to speak? Because I know she was busy. Oh, I guess she's not. Well, we'll come back to her later. Brian. Oh, one more. Zishela Shaoli. Well, sometimes people get shy. Okay, Brian, take it away.
My pleasure.
Feel free to ask questions when we get to the Q&A. Sorry, go ahead.
So what's the goal here? The goal, at least from my vantage point, is I've got actually an amazing variety of people that I can relate to on so many levels. I'll do my best to talk to each of you individually. I was actually on a telephone call, conference call the other day, and I found myself asking, who just said that? Who just said that? Because the context of the individual and their background wasn't quite apparent. So it became so clear to me. It seems obvious. I love things that make me the master of the obvious. That Zoom really does have that added value. I have to think about who is actually speaking. So I'm going to do my best to connect to each and every one of you and some of the backgrounds that I've noted that you each have. From my vantage point, I need to share with you, and I think Stuart said it well, or one of you said it well. Why are you even here listening to me? What's the point? You get up and you have your breakfast, hopefully, and are told that there's this opportunity to talk to this mythical, perhaps, individual. I have to make it important to you. So I have to have something at the end of this conversation that you remember, I have a responsibility to share with you the things that I've learned that you've not really heard before. I've given 2 to 3 presentations a week in New York City for the past 50 years, and I've spent more time with startup founders and investors and attorneys, debating mostly the attorneys, because they're the ones who really have done, I think, an injustice to a lot of founders. That's a whole different conversation that's important for you to have with someone, and I certainly can offer some insight and guidance there. But for the most part, I'm a founder. I founded after I got out of grad school. I had gotten my master's in science and technology communications. I founded the very first science and technology PR technology firm, became the largest in the world, 300 employees, 5 offices around the world. And I sold that in what one would describe as a bidding war when I turned 40 years old and retired. And that, I think, is what everybody seems to have as a goal these days, as early retirement. I was really lucky because I married my partner, and we were married beforehand. And part of my understanding of life was to make sure you spend it with the one you love and around people who love you. Now, that isn't usually a presentation point that's made regarding anything in the entrepreneur startup world. But I see too many people, for whatever reason, not trying to make that part of their lives as an entrepreneur. And I want to make that crystal clear to all of you. And somebody said they want to be sure that you're happy. I think the gentleman from Israel said that. And I know it makes people blush a little bit. Sometimes it makes them giggle. I've got lots of slide presentations, and one of them that tended to work the most is when I talked about being in love and entrepreneurship together, not independent of one another. So if you have opportunities that you haven't explored yet in your lives to find love in your life, and to ensure that that's an important part to complement your work in the startup world, make sure you try and do that. It's not something you just put off. Last week, I had a dinner with about 30 of my startup founders in New York City. I believe, at least I've been told, I'm the most prolific startup funder in New York City. I had been chairman for 12 years of the New York Angels, the largest startup seed funders in New York City, having invested almost $250 million in startups. Interesting, founders who I sense, have been, for a great extent at that time, entrepreneurs living on hopium. Maybe you've heard that before. And a lot of my interest is to try and help them become real entrepreneurs, not living on hope anymore, but being honest and straightforward about where they are and what they're doing. The dinner was incredibly fun because one of the great relationships that you have as an angel investor, as a super angel, is with founders, particularly as I've been doing it for almost 50 years, which seems like a lot of time, but to me feels as though it went by in a snapshot, which is very, very bizarre. I started the world's first science PR, the first science and technology computer publications back in the 70s. And then after New York Angels, I retired to do ongoing work in the foundation area of science literacy. I just got a Pulitzer grant to try and teach science literacy. I started a magazine called Open Mind Magazine to combat science and combat science misinformation and disinformation, which of course we know is pushing the boulder up the hill, which is really problematic and hard. I'd say it's probably the hardest thing I've ever done is to build a nonprofit startup. You talk about begging for money to raise, just to make money. Talk about, raising money for a business that you're not making money in. That's an unfortunate thing, but the nonprofit world is broken. So I'm going to do my best to offer you insights, the things that they sometimes call inside baseball, that will hopefully surprise you and may make you really rethink a lot of what you're doing. I'm a hard-nosed capitalist. I understand the issues of capitalism relatively clearly. All my kids had to start a company before they were 25 years old. All of them did. I don't believe in giving my money to my kids, but I do believe in investing in them. My oldest daughter started her company in the travel business. She sold it to Barry Diller. She won the exit game. My oldest son, Trace, you'll probably see maybe on whatever Twitter type platform he's on. He's been my partner for a number of years in my investment work. He started his company as a freshman in college, and he just had his exit 3 years ago. And he doesn't have to find himself working that hard either. My youngest son, my baby, he's 32. He was on Shark Tank. He was on the real Shark Tank. It's been repeated something like 27 times. He walks down the streets of New York, wherever he goes, oh, you're that sheet kid. So he invented a peel-away sheet for college students who didn't change their sheets. His primary marketplace is huge. It's caregivers, where respect is important upon changing sheets and making sure that you change a sheet in 30 seconds rather than in half an hour. So all my children have grown their businesses. They've been fortunate to have their mom and dad be angel investors. We help fund them and raise their funding as well. But there was nothing that compares to being in a position to help your children become entrepreneurs and succeed at it. It's a daunting task because the success is hard, the pain is hard, but once they cross that threshold and they get it, as you all know, the things that you've learned, the things that you've experienced, you could never experience working for somebody. It's just not possible. And so all of you are special. I know your mothers feel the same way, but you are. The question is how special and how long you can keep, the opportunity and the journey that you're each trying to reach, in your clear sights. So I'd like to start with a couple of very specific things. The first thing, and again, this is a teaching moment, is I'm going to ask all of you to try your best never to use, when you talk about yourself and when you talk about your business, tentative words. I studied rhetoric in college as well. I was a biochemist. My life is all about speaking. When you use tentative words like could be, would, should, maybe, we'll see, I hope, that's easily picked up by people you're speaking to. And you'd be really, really surprised how the mind works when you use tentative words when you're trying to raise money or trying to sell something. The person who's listening actually clues in on those words, whether or not they think about it or not. And the intent, the clear intent of your work is to be successful. So you should never use, and I'm being very, I would say cursory with giving you this kind of input, but you should be very, very concerned not to use words that make people question whether or not you're questioning your potential success. That makes sense to everybody? Heads shaking up and down? Good. So that's an important point.
Sorry, what did you call those?
Excuse me?
What was the terminology you called those words?
Tentative.
I'm sorry, I couldn't hear you.
Those are tentative words you call them?
Well, they're tentative words. Maybe, we'll see, I hope. And you'd be surprised how many times you use tentative words in your normal day-to-day conversation, both to describe yourself and describe the business that you're in. Try counting and try catching yourself. I know it sounds kind of simple, but my oldest son he was an person all the time. And I think you can tell how annoying that is when somebody says too many times. Gets in the way of what you're trying to say. So you really don't want anything but positive words to say to people about yourself and about what you're doing. Second, nothing in your world, unless you're doing work in the social world, unless you're doing work in the nonprofit world, really involves the word passion. Passion doesn't help you sell. Passion doesn't help you balance your checkbook. Passion is an emotional, feeling that gets through you, and it's momentary. But passion has been overused, and it's really all about making money in capitalism. The number one reason companies go out of business is they forget that they're supposed to make money. And if you're not focused on that, and you're not supposed to be shy about it, I made a lot of money. That makes a lot of people giggle, but isn't to some extent that your goal, unless you're in the lifestyle business. And that's just as good. There's no bad thing about being in that lifestyle business and helping people. But I have been in the business of helping founders make lots and lots and lots of money. I'm working with a company now that's trying to start a company in the marine world, where I come a little bit experienced out of. And I asked him, why is he doing this? He says, I want to help people. I said, no. The only way long-term you're going to help people is if you make money to sustain your business. So you can. So if you're in the business of doing anything, you've got to make the money to be able to keep doing it. Where was that young lady who was doing analyst work? She seems to have dropped off, I guess.
I am here. I am
Oh,
here.
there
I
you
would
are.
say Robin, yeah.
Well, each of you are intriguing. So Gideon Gartner, I helped start the Gartner Group. And Gideon was like my brother. He passed away a number of years ago, one of the most brilliant minds in the world. I played chess with him almost weekly. And he died of the horrible, losing his memory. It was painful to watch him. But Robin, you really bring back, the days of lore when intelligence and being able to describe your intelligence to people who really care about the specifics of what you're doing, the insights that your business provides. That's what analysts do. It used to be part of your, let's just sort of say, justification for what you're doing. And all too often, when I was giving a presentation at Columbia a couple of years ago, I asked 200 members of their CEO organization at Columbia Entrepreneur Organization, whether or not they wanted to be coddled. And of course, everybody said, no, we don't want to be coddled. And it turns out that most entrepreneurs would rather have people tell them what they want to hear, rather than the things that hurt, rather than the things that they don't understand. And Robin's business, it used to be really part of the startup world where, your rite of passage was if you could pass muster with the analysts. Because the analysts weren't in the business of trying to make you feel good. Esther Dyson, another key person from the startup communications world, startup marketing world as well, and startup world, it's broadly, Esther's amazing. Also someone I've known for 50 years. She and I were going to start a business called the Devil's Advocate Group because we felt that startups really needed to be told the truth and needed to be terrorized. And I don't use that word lightly. I think that you should cry every now and then when somebody comes after your idea, and you should be able to defend it. So for years, we've talked about starting the Devil's Advocate Group, where you would, go into a room just like you would go to an analyst organization years ago. I'm deeply intrigued, Robin, that somebody's doing this, and put yourself at risk. And very rarely do startup founders want to put themselves at risk. They don't want to be told. They would rather just continue on their merry way. But your business is like a line. And at one end of the line, you got the things that will kill you. And those are things you want to ignore. The things that are horrible and mean and difficult and problematic and that you don't understand completely, a bad employee or a whole host of issues you haven't been able to find the answers to. And you tend to shy away from that. And that's one end of it. And you shouldn't shy away from the things that can hurt you. Well, when you work with analysts, their only interest is to find the things that can hurt you. And they want to expose that. In some extent, Evan, Spiro, it's almost an Israeli perspective. And one of the reasons, the Israeli startups tend to do better than most is because they're so direct. You will have startup founders, and I've gone there and I've spoken at the Technion, literally tell you shouldn't be a founder, you're not smart enough. That is about the worst thing you could say to some founders, because instead of making them fight harder because they want to prove to you they are, they'll just yell at you for being so mean to them. Well, I urge you to find the mean people. I urge you to find the people that are going to try to hurt you and tell you that your ideas aren't what you think they are, because it can only make you stronger. So don't spend time around people who are going to coddle you. That's the worst thing you could possibly do. You want people who can challenge you constantly. Another point is that, and this happened at the dinner that I was at, I've totaled that we've invested in about 65 startup companies in New York. And the best part about having dinner with the founders is that it was a hug fest. I'm a big hugger. Certainly COVID put a crimp in that. If you could feel me giving you each a hug, and that's not dangerous or problematic with women these days on Zoom, sorry. I didn't ask permission for a digital hug. That'll be the next thing to ask permission for. He gave me a digital hug. I didn't like that. Oh, I'm sorry. But one of the best parts is that you should reach out to people who care about you. Talk to people who want to continue their conversation with It isn't a pit stop. You're not a pit stop. When you raise money, it's a strange phenomenon. But again, as a word person, people call you a deal. So what deals did you make this week on your investments? And I'm sorry, I don't call my founders deals. And there's this tendency is, how many deals did you do? Do you want to be referred to as a deal? I don't think so. You want to be referred to as an opportunity. How many investment opportunities have you invested in? So you're an opportunity. You're not a deal. And when people refer to you with anything less than a warm hug, you want to walk away from it. And that's the other next point. The next point is, don't spend time with people who tend to just give you money without being in a position to offer you something. One of the best founders I had actually passed out a questionnaire to potential founders. And one of the questions, which was the most important one, is what are you going to do for me? What are you going to do for me? And don't forget that the best investors are the ones that are the most visible, that don't hide from you, and have a commitment to doing something for you, not just providing you with some dollars. Yes, I know it's hard to say no to money. And it's easier to, say, oh, okay, I'll just take it. But do your best to find people who really want to offer you some extra value. That's probably something that you already know, and I probably already promised you that I wouldn't tell you things that you already know. But I can't help that, because the amount of LOVE that was in the room with these 30 founders last week at the meatball shop over in Hell's Kitchen, we had it. They haven't gone there yet. It's good meatballs, of course. And the founder of the meatball shop also founded Seymour's and founded a bunch of other restaurants. He was there, and he sold those restaurants. So he was a startup founder in the restaurant world that sold their restaurant. Wow, that's pretty amazing. It's hard to imagine restaurants these days being successful. But he understood the relationship that he had with his customers. And so understand the relationship you can have with your financiers. Money is plentiful. That's another point. Money is available. You just have to find it. New York City, at least those of you who are in New York City, and Bonnie, of course, has been one of the chief architects of this, is a incubator unto itself. New York City is a startup incubator. It's free. People always ask, what's the difference between California and New York, Silicon Valley? I think New York, somebody just saw from Primary, they just held their event this past week, that New York now has become the largest. I'm not sure how they measured it. Everybody always wants to be the largest, the biggest, the best, the finest. But they did say in the article I read last night that New York City now has more startup founders than anyone. I think what Silicon Valley is now more known for is having more failed venture firms than anyone. You know, there were almost more venture firms, more angel investors in Silicon Valley than there were startups. So here's the other secret. I wrote the book on angel investing. The first one, what every angel investor wants you to know. McGraw Hill, some of you may remember them as a publisher. I revealed, and I certainly track it because it's my life, that nobody really makes money at this. Oh, look at that, Stuart. You're so sweet, Stuart. No one really makes money at this. Why am I even saying that, or what's the point of saying that? It is really, really hard for investors. Understanding them is critical to you understanding how to begin a relationship with them. So I'm going to give you a piece of incredibly important advice. Understand what's going on in their heads. They have made whatever number of investments they've made, and their only interest is to make money. And that's fine, because if it rains more people will stay in business and they will continue to be investors. The average angel investor invests in maybe 1, 2, or 3 companies. That's it. And if it doesn't work, and for ones that actually invested more in Monte Carlo theory, which means you've got to invest in at least 25 startups, the chances of success are almost zero. Zero. Now, I could say this from experience. I ran the New York Angels for more than a decade. I watched as some of the most exciting companies, and many of them are you, came in, made presentations. Everybody thought they'd be successful. And success is a word. What's that word? Exit. That's it. It's a simple word. It's 4 letters, right? Exit. The only way that a VC or an angel investor makes money is when you exit. So why don't you try this? Next time you give a presentation, tell them how you're going to exit. Use the exit word. Use it like pixie dust. Sprinkle it sparingly on every opportunity you can to offer a discussion about why somebody should invest in you. They're not investing in you, not just because they like you or they believe in you and that. They're investing in you because they see an exit. Is there any other reason why they would invest in you? Unless you're a nonprofit doing something good in the world. So when Joseph is going to offer his counsel, and others here are going to offer their counsel, if you don't offer the word exit enough, the rationale as to the purpose of investing in you isn't clear. How are you going to grow big enough, smart enough, opportunistically enough to be able to exit? How are you going to do that? And it's okay to talk about, and I've debated just about everyone I can imagine. You should have an exit on your mind all the time. And people would say to me, oh, Brian, that's sort of silly. A startup thinking about an exit from the beginning? So yeah, that's fine. I sit on many boards, many companies I'm on, and at the end of the meeting, we always ask, so are we preparing ourselves? Are we thinking enough about an exit? Since that is the goal, that is the ultimate goal. It's about the exit. So I can continue to talk about a lot of very specific things, but what's more important is I listen to what you each have to say. So let's see if I can do something here. I'm going to start with Stuart. What is the one question you'd like to ask that everyone here would be interested in knowing the answer to? And am I putting you on the spot? Absolutely. But that's the whole point of being a founder, being put on the spot. That's the rationale. You're always going to be prepared to be able to offer insights and the like about your business, and you should be able to dance. Dancing is another way of saying I can answer every question because I've thought about that question before. It's one of those annoying things when somebody would ask a question in a meeting I'm in, and somebody would say, well, that's a good question. And I'd say, why is that such a good question? You should have thought about that before they asked it. So, Stuart?
Yeah.
Got a question?
So I'm really curious about the state of the investing environment today. I hear lots of conflicting messages about it's a good time to do a startup, that the fall off.
Let me use our time wisely because I got your question already, and founders are very pithy with their questions. Thank you. Do you really care? Does it really matter? The economics today of whether the investment community is strong or weak or not. Does it really, really matter to you? It's a good conversation to have over lunch, right? But in the end, there's always investors. They're always looking to deploy their capital. And some of you already know that there's a lot of dry gunpowder, as they say. I hate anything to say with guns. There's a lot of opportunity of money out there. So if I said to you, oh, it's slowed down, is that going to cause any difference in how hard you're going to work to raise it? No. Maybe it's going to be a little bit more cumbersome. Maybe it's going to cause you to be sharper, more thoughtful. But it really doesn't matter because we all go through the cycles, the markets goes through their cycles, and we find ourselves still needing money. So you're just going to maybe work a little bit harder and a little bit smarter. But I have a feeling, Stuart, you work hard and smart at everything you do.
Well, so there's a timing aspect to there's a timing aspect to that also, isn't there? Is this a good time? Is this a good time to go out and raise versus should I wait another 6 months?
That's like back when I used to say that it was always, the market for buying a condo in New York was too expensive 30, 40, 50 years ago. I'll wait for it to come down. No, you're on your own trajectory, right? You could keep waiting, but I'm sorry, you need money unless you don't. Money is fuel for your business. Now, will your valuations be different? Absolutely. No question about it. I think when there's plentiful money out there, there's more stupid money. And stupid money is a lot cheaper to raise. So if the question is what's changed a little bit, but that's just a cycle. I made some of my best investments in the last, financial crisis. I'm sorry, but I was able, and I wasn't taking advantage, I was able to get more appropriate valuations. Because some of the valuations that you would get of some of the companies just 2 years, 2-3 years ago were just, just astronomical. They weren't right. And that hurt everybody. I think we've come back to a point of which it makes a lot more sense to raise money in a more normalized environment. Joseph, what have you learned? You teach this, you offer insights. What question do you have that you're curious about that plagues you the most, that you're just not absolutely sure of?
Talking to me, huh?
Talking to me? You're talking to me?
You're talking to me?
Talking to me?
Yeah, I don't know if I have a question, but I'll make a comment about the tentative words. I love that, and I think too many people use tentative words, at least my experience, from fear of being wrong, right? They don't want to be wrong. They want to hedge themselves. So
Good. I agree with you.
So my question is on that.
Oh, so good. You got a question.
Yeah. Good. What would your advice be to train yourself to use fewer tentative words or no tentative words?
Be aware of it. Now that I've told you this, you're going to be more aware of it. It's a phenomenon that once you mention a word like that, you'll go, oops. Okay, there's a limited time on these presentations. That's why I move along so quickly. And that reminds me of another important point. And this is probably the most important point of all. Let me say this slowly to each of you. You're in control. The money is not. There's this weird belief that the people who have the money are in control. They're not. You are. The only reason I exist as a businessman in this world of startups, of funding, is because of you. If you didn't exist, I wouldn't exist. So who's in control here? You are. And that goes hand in hand, Joseph, with the question. Being in control means you sound like you're in control. Being in control means you hand out questionnaires to people, asking them, what are you going to do for me? Being in control means you know how to raise money properly. I can't watch you run your business, though I do try. I do try and spend time with the company's founders, and I sit in their offices and I listen to them. In my book, I always say I had breakfast, lunch, and dinner with all of my founders. I want to find out how they eat. I want to find out what kind of wine they wear. I want to find out how they chew. I want to see how they speak and chew at the same time. I want to see how they talk to each other. I want to see if they're kind. I want to see a lot about their day-to-day habits. It's so important to be in control of what you're doing and not doing. So try to think of yourselves as being more in control of what you're doing. That'll lend itself, Joseph, to being less tentative as well in how you describe what you're doing. Daniel Greenblum, you look serious. What question do you have? Wow, great smile.
Sorry, yeah, I have a serious look, I guess, in the morning. I guess my question would be when I set out to found Catch, I believed that I was.
Yes, don't use the word I guess.
Okay.
You're not guessing.
Good point. When I set out to found Catch, I believed that I was using AI to solve the cybersecurity problem. What I learned is that not only is it not necessarily AI, it's just that the buzzwords of today are.
Got it. No statements, only questions, please. I apologize.
Okay.
I'm sure you're incredibly.
No, you're absolutely right. So I would say my question is for both investors and founders is how they think about AI in terms of the solution and the foundation of a business, and whether or not there's true product market fit available in its current state.
Well, I think you know the answer to that already. I mean, AI becomes a buzzword. At some point in time, the shine comes off of it. It's no longer that important. It seems like it's a pretty normal thing. It's a wind, as I sometimes use them, as I sometimes say it, that blows through a marketplace. And you say, oh, I got to catch that wind, right? So AI, for those who really care to understand it, is a huge database. And if you're not really accessing a large database, it's the first question I ask, are you using, quote, true AI? And most of the time they're not. But to the average unfortunate nature of an angel investor, they wonder about whether or not you're mentioning AI. Why haven't you mentioned it? I think honesty is the best approach. You said something that was somewhat prophetic and another key point for all of you to listen closely to. Do I have everybody's attention? This is interactive. You're supposed to nod or say yes. You can all get off mute. I don't care about anybody jumping in at any time. I'd rather you do that.
Yes.
The audience, would that be cool
Yes,
if you had-
Brian.
There you go. Wouldn't it be cool if you had mute buttons for everybody? When you talk in front of an audience, nobody's on mute. So I don't know why everybody has to be on mute when I do Zoom calls. Let's make it like a real audience. So when you start your presentations, there's this sort of sentiment, and I've unfortunately seen thousands of presentations. You start by saying, hi, let me tell you what I'm doing. And the audience then gets teed up to start focusing on what you're doing. Okay? I'm going to ask you to change that. I'm going to ask you, because we're all human beings, I'm going to ask each of you that for the next presentation that you give, try this. Look at the audience and say, and Daniel, you said the key words a moment ago, but you didn't realize it. He said, I believe. So you've got a few minutes to make a connection to people who are total strangers. When you go up to them and you sound too mechanical or too transactional, that kind of is like reading a book. But when you start your presentation by looking around the audience, just for a moment, go left to right or right to left if you're from Israel, and look at everybody and say, let me tell you what I believe. I believe that my technology has these values. I believe my technology can do this. I believe that this needs to be solved. I believe. Think about that connection that you make with everybody in the audience. There's this tendency to believe that you're supposed to make a brain connection. But the fact is, most investors make heart connections. And unless you appeal to the heart first, the brain doesn't follow. So the minute you start a presentation off with somebody saying, I believe, the person in the audience says to themselves, wow, they're sharing something important, something that they think about, something that matters to them. So I couldn't help but just jump in on that. But I think I tried to answer your question on AI as best I can. Heather, you're doing some really cool stuff. You're tracking people's lives and legacy, and you're putting them in a position almost like creating their own autobiography.
Mm-hmm.
Of course, the thing about autobiographies is, their world according to them. But I guess that's the best you can do these days if you're doing that.
Mm-hmm.
A friend of mine writes autobiographies, for people. And of course, he ends up asking them, did that really happen? And the person would say, oh, absolutely. So what question do you have?
I would love to know if you have any advice to female founders how to gain the attention of VCs and cut through the noise when you're so different from the start.
So there's certainly been a lot of attention. When people get married, I always have the answer to a successful marriage. I've been married 41 years to my best friend and my partner, and the most amazing mother to my 3 children and grandmother to my 3 grandkids. I always tell people that when they get married, the success of their marriage depends on 2 points. One is that the men have to know that the women are superior. That makes somebody giggle, right? Somebody's giggling.
Me.
But I do believe that. And I think the things that men believe are absolutely the same, but they're not always willing to admit it. Because most of the time, even in Silicon Valley, particularly, men are very, very concerned about spending too much time with smart women for all the reasons that the men on this call understand. They're intimidated. So I know that sounds too generally, spoken, words, but and there are 2 rules, and I always like telling this about any newlyweds. There's only like any newlyweds on this call? No, okay. The second rule, of course, is that the women can't remind the men that they're superior. That's when it all falls apart.
Yep.
It's very true. It's very true.
That's it. It's 2 simple rules to a successful marriage. The men know it, and the women can't remind the men of it because of the machismo thing.
The ego.
I think the issue about men and women in the world of raising money is that you have to take a little bit more time to be the professor in the room. You have to acknowledge the issues that get in the way. and the concerns so you can just sort of not ignore them. Being in a position to say, listen, some of you may be not, some of you may not be interested in investing in a woman, or you don't know how to, or you don't know how to relate to me. Why don't you spend some more time and I'll chat with you about the things that I'm doing, the things that matter, and my execution capabilities, and that'll put you at ease. But it's a male-female thing to a great extent. Most men, knowing that they're going to have to spend more time with their investment, are more comfortable spending more time with an investment of a male founder. So you've got to expose the issue up front. If you have any concerns about investing in a woman, say it now. Let's get it out of the way. I always like being a behavioralist. It's not what people are saying, it's what they're thinking. So always be aware, it's not what they're saying, it's what they're thinking. And expose what you already know they're thinking and get it out of the way. Ian, you have a question?
Yeah, this is based on what you said earlier, that most venture capital investment doesn't produce any financial results.
They don't.
So given that, why should we, in a sense, take VCs seriously in terms of how we approach them if we know that their business activities don't produce financial results?
Well, you're hoping to an extent, and this is their hope, right? That they're going to figure out this is a company that can succeed. So there's an interesting study. You could all look it up. Yale and Harvard got together. And I mean no harm by saying this, but it's a great piece of research that was done. Yale and Harvard got together and asked a singular question. Be amazed about this study. Does skill have anything to do with venture capital success, Ian? I don't know for anybody who heard me. Does skill have anything to do with venture capital success? Well, first let's look at this. Let's break it out. Do you have to take a class to become a venture capitalist? Do you have to take a course? Is there some training? No, there's nothing. Anyway, the study, you could look it up, Yale and Harvard study, came back and the answer was 0. Let me just repeat. Skill has 0 value in venture capital success. And you're sitting there going, oh, come on, Brian. That's not possible. Because I know there are successful VCs. And yes, there are. But to some extent, that's based on a lot of luck, eating luck halfway. And it's also based on a lot of the major VCs that do succeed because they got in a de-risked venture opportunity. So the money is there. Their ability to make the right choices is to make you the right choice. So if you're starting with this blank piece of paper that they see in front of them, make sure you give them ample reason to invest in you. Make them smart enough to invest in you. Calculate it out for them. I always say, and I was saying it a moment ago, play the professor. So when you're on stage, you're making a big assumption. And that assumption is that everybody's going to get. They're going to get what you're doing. They're going to get it, but they don't. The only way for people to get it is, and do this, it's a physical thing. Step to the left, step to the right, and say, let me explain as a professor. You don't have to use the word professor, of course. Let me explain so that you're totally crystal clear about what it is we're doing, what we're up to. Let me help you through some of the harder points. The minute you say something that's not believable, everybody shuts down. So if you know you're coming to a point, Zarin, where you say something and the person looks at you quizzically, you know you better stop at that point, Amy, and say, let me explain this to you so you're crystal clear. Because if you don't get this point, it doesn't matter what I say afterwards. You're going to miss everything anyway. So play the professor. And it's fun to play the professor. You're all professorial, right? You all are teachers. Teach. Don't say. Teach, teach, teach. And it's so much fun to teach. And it goes back to the point also about building a relationship with the people who you're talking to when you act as a teacher. Because people really do want to learn. Robin, what question do you have? You know some of my old friends. I'm just checking your LinkedIn.
Yeah. I think I'm curious about, I know some VCs have platforms. And by that, I mean they provide services to their portfolio to help them grow. So they might provide marketing, help or different things like that. So the question is, generally do VCs, my specialty, I'm self-serving here, is helping evangelize for startups and educate startups. Would a VC be interested in my help to educate their portfolio? I'm not sure about that.
No. That's an ego thing.
Mm-hmm.
So what are the two things that kill a company more than anything? Ego and greed. That's it. Most of the time, a company is particularly capable of succeeding. But the minute they let ego and greed become part of the dictum of making their decisions, things fall apart. So I know the VC world intimately, really, really, really intimately. And they don't think they need the help. But the other part is, if they admit they need the help, it means that they're weak. And there's this bizarre feeling. It's like the third year that you go to medical school. There's this class that everybody used to take called I Am God. They used to joke about that. The doctors used to think they were gods. Well, the same thing with VCs. I'm sorry, I know it all, I get it all. Now, the ones that don't are the smart ones. The ones that don't are the ones who are willing to admit, that they're vulnerable and not knowing something. And we always talk about that word vulnerability, but the VCs don't have it. Because if they admit that and that gets around, that means they're weak and they're not strong enough to be who people would believe.
So basically, they're like the men in the marriage, right? Sorry.
Bonnie, what did you say?
So basically, they're like the men in the marriage.
Yes.
Brian.
And Evan had questions. I don't know if you want people to ask or if you just want to go around and keep putting people on the spot. Up to you.
I don't think, listen, this is part of, the shtick that I've used. You should always be ready to be put on the spot. And that's the best part about it. You're all sitting there going, is he going to ask me? Is he going to ask me? Well, by now, each of you has a question because you think I am. But great founders, always ready.
And you don't need to stage anytime.
Hey, Brian, I got a question.
Yeah.
Chris Krachman. Since you're a behavioralist, I'm in the top screen. I've got my earbuds with the my brand on there. That's why. So it's on my phone. So my question is, based on the fact that you're a behavioralist and understanding people's behaviors, and my whole purpose is to improve that, I would like to have lunch with you or dinner because I'd like to talk to you about that topic to gain some insights. It's primarily why I'm here.
Okay, but you don't have a question.
The question is, when can I see you for lunch?
It's almost impossible these days. I moved. I'm a grandfather. My book of life, as I describe it, I closed it relative to the things that are my primary interests in my life now. My primary interests are making sure that my progeny, my grandkids, my family is strong. I know that sounds maybe not what you want to hear, but I've spent all of these decades, 5 decades, giving of myself to everybody, and now, and I want to make it clear, I loved every second of it, every minute moment. I've loved it, as Faye knows. But there's not enough of me. There's not enough time. So the only way to reach me these days is either come to a presentation that I'm at, which is far and few between because there are very few real presentations anymore, other than this. And I hope that the guidance I'm giving you, I was very lucky. There was a guy by the name of Peter Drucker. And if you guys never heard of him, you should. Peter Drucker was actually someone who years ago wrote a book called Management. Did you know the word management didn't really exist until he wrote this book called Management? He was one of the great consultants. So I was really lucky to know him. And it gave me a lot of pleasure. But he would ask me at the end of every time I met with him, as I paid him $1,000 an hour 50 years ago. 50 years ago. He would look at me at the end of the meeting and says, I don't know why you came here to see me. What I just told you is on page 63. Right? So I apologize up front. My life is about the joy and the love that I have in my life. And anything that takes me away from that, as you are as founders, anything that takes you away from the prime imperative of making your company successful, other than the love in your life. You know, try and keep things simple. That's the other message. Simplify, 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 simplify. The human mind isn't really capable of listening that clearly. Make sure that whatever you say is simple as it can be and as clear as it can be.
I just wanted to add
You have
that
a beautiful flower behind you. I'm sorry, what, Bonnie?
Oh, I just wanted to add that Peter Drucker is the father of project management.
That's right. That's right. He wrote a really good book you should also read, Managing in Turbulent Times.
Yep.
When isn't it a turbulent time? There's another little book you should read. It's a beautiful thing, wisdom. How many of you are wise? Well, wisdom is what you're always seeking, not just answers. You're seeking wisdom. So there's a little tiny book written by a guy by the name of Neil Postman. He was a disciple of Marshall McLuhan. You may know who Marshall McLuhan is. You know, he was the great whiz laureate in the world of media. He's the one who said the medium is the message.
Yep.
Well, his disciple who used to teach at NYU many years ago wrote this little book called Amusing Ourselves to Death. And it simply says that if you smile more at people when you talk to them, you'll have a better chance of making friends. If you smile at them when you're giving a talk, you'll have more of a chance of making a connection. Because people really just want to be happy. They just want to be entertained. They want to be with people that they want to see again, period. So if you're not the person who makes them happy, they're not going to be interested in seeing you again. That's a behavioralist point. That's so simple. Isn't common sense, and isn't common sense anything but common? Be the happy person that somebody wants to invest in, so they want to see you again.
And it's so easy, right?
It's so easy. Don't overcomplicate things. Don't overcomplicate things. Just be the happy person somebody wants to see again. That's what the investor's wanting. They want to be able to know that when they see you, they're going to be happy. So surround yourself, the investor says subliminally, with people that make them happy and who know that they want an exit.
Yeah.
Natasha, please, your turn.
Oh, I didn't have a question. Well, I did have a question. So earlier in your presentation, you spoke at the ERA anniversary. So I was just honored at a UBS event where it was 25 female founders who received $50,000, and everyone was talking about ERA and how ERA was not a great opportunity. I thought it was. So I came into the situation and conversation positively. And then 100% of the women said, don't do it. And I couldn't get offline with anyone to get like the details.
Did anybody give you an answer? Why?
No one gave me I wanted to know details, like why were you mistreated? Were you financially, mentally?
Well, let me give you a response, because I try and use my time wisely, and I apologize if it sounds like I'm interrupting, but I got your question.
No, that's fine. Thank you.
Everything, just like I told you at the beginning of this presentation, is a decision you make. Do you know what you do more in life than anything else, Natasha?
What?
I'd always ask this question in a presentation. Somebody said, breathe. Somebody says, eat.
I say, think.
Somebody says, sleep. No.
Die.
The one thing you do more than anything else in all of your lives on this call is make decisions. And some of you don't weigh those decisions properly. Some decisions are more important than other decisions. Not every decision weighs the same. So when you're making decisions, weigh the ones that are the most important. So what I can tell you about anything is that things change, and they're not always the same for everyone. But you know that already. And what's the other thing you already know? You get out of something, whatever it is, you can put into it, and you're going to ask all the questions you can about why you will become part of something. So I love Murat because nobody's heart is more solid, more caring than Murat's. He was a founder. He started ERA before anyone else did. I helped him start it. Do things go wrong? Of course they do. And people tend to talk about things that go wrong more than they talk about things that go right. Yeah. So it's up to the individual. Our startup accelerators, incubators, whatever you want to call them, are they all good for everybody? Not necessarily, but they are for some. And if you're really looking for money, which most of you are, he happens to have, if you ask the question, how can he help me, find money? Nobody in New York puts on a demo event like Murat does at IAC. If you've ever been to his, how many of you have been to his startup events at IAC?
I'll be there on the 5th.
Right. So automatically you check off that box. Does he have the visibility in front of funders? The answer is yeah, he does.
Mm-hmm.
Does he care about your success? Oh my God, does he care? And interview each of the people that work there. If you're so concerned, don't listen to the people who are the naysayers. Talk to the people who are positive. Say, why are you so positive? What did you get out of it?
Right.
Listen, I don't trust anybody to give me any bad information anymore. The world is filled with mis and disinformation. I'm not interested in hearing it. I want to hear the things that really matter, things that really are positive. Try for one day, each of you, to only talk about positive things. See how hard that is.
Yeah.
When you have your next lunch with some friends, say, okay, I'm having this lunch or dinner, and each of you could only say positive things in the conversation. I only want to know about good things, not negative things. So it's just this weird, you all know it, tendency to be negative. So I hope I've answered your question.
Thank you.
My pleasure. My pleasure. So Nicholas, have we spoken yet?
We haven't yet. So I can tell you a little bit about my I've got a product idea that is kind of in wireframe. I can dev. It's
I only
kind
want
of
to know
when do I
Nicholas, I'm sure you're very interesting.
Yeah, go ahead.
Question.
Yeah, it's like when do I share it with the world? What stage would I take it from where I am now and
As soon as possible. I mean, an idea only exists in your head until you share it with others and it becomes a more flourishable idea, right? What better way to give birth to a child than to actually, have one?
Yep.
Right? You're not going to know about anything unless you actually bring it to the world. So as soon as possible, start talking about it. Get input.
Cool. Thank you.
All right, Steve Berger, I've seen you before.
Yeah, my question is our company is pre-revenue and the people we've talked to are looking for a track record. So what's the best way to get past that roadblock?
It's kind of sort of strange. I only invest as the first check. So that means there's very little track record, unless of course they've been bootstrapping for a period of time, which is very, very cool to be able to do.
Right.
But the people who don't understand writing checks early are the people that you don't want to talk to. Don't waste your time.
Okay.
So here's the other point. What are people investing in? They're investing in your ability to execute on your idea. Fine, you mentioned the idea, and here's what we're doing. This is what we plan to do. This is how far we've come. But their next question is how are you going to execute on being successful? That's straightforward. It's like angel investors who say they're hard to reach. Why would you be an investor that's hard to reach? Can anybody give me an answer to that? So we want to invest in you. That's if they're really angel investors. And you could, because you're in control, right? You're all in control. Ray, are you in control?
Yes.
Ray's not nodding. Right, Ray, are you in control?
Much as I can be. Sometimes I feel like I am. Sometimes I feel like I'm not.
And that's a reasonable, good question, but you're trying to be. Just the whole concept of wanting to be, knowing you can be. There's always those moments between being not in control and then wrestling control. So you should always be in that position. And I'm trying to remember what reason I was pointing to you to follow up to Steve, but I can't remember now. That's because I'm a little bit older and I can't keep track of the bookmarks in my speeches anymore the way I used to. So let me move on. What question do you have, Ray?
Why is the focus on so many investors continuing to be, very complex crypto and digital stuff when there needs to be simpler solutions to the world of tokenization?
So 95% of investors are stupid. They're not, and they're not stupid because they are, interested in being stupid, but they're not as interested in learning. And they're not, and they tend to sort of be social proof investors. They tend to sort of follow the herd. I don't try to follow the herd. And so the herd mentality is what drives most of human life. We follow people who seem to know. There's this great triangle I saw many years ago. And at the very tip of the tip of the triangle, did we lose Bonnie? Oh, there's Bonnie. You're all green, Bonnie.
Oh, I'm sorry.
It's okay. You're all green like money, right? At the very tip of the triangle, an itsy bitsy tip of the triangle, if you can imagine it. Those are the people who make things happen. And then right below the triangle, you've got another line. And it's a little area right below it. And those are the people who follow the people who know what's happening. And then for the most part, the other 98% of the triangle are the people who don't know what's happening. And investors, a lot of them aren't that smart. And if there's, particularly with funds, I never invest in funds. They tend to follow the herd, and because they have to invest, they'll go in the newest and the hottest, and their investors will pressure them. There's slippery slopes when you invest in funds because they have to invest. So seek out, investors that aren't just trying to be part of the herd, unless you are actually in that category. Because those are the winds that are blowing that make you more of a tasty tidbit of opportunity.
Thank you.
And stupid isn't a bad word. They don't want to be, but they don't have a choice. They can't keep track, and no one knows. No one really, really knows. So they just try and follow the herd of what everybody else seems to be doing. And we've seen that with Tiger Global. We've seen that with Apollo. We've seen it with all the giant funds. And it goes back to the point I said before. Skill has almost nothing to do with their success. One of my best investments, if I may talk about it, was Tommy John's underwear. Everybody know Tommy John's underwear? Right. So
what about Pinterest?
I'll show it to you if you want me to.
It's okay.
Right,
That's TMI.
TMI.
It's a family show.
When I'm on stage, I usually just pull it up. That's just to get the audience a little bit more intrigued. But my interest in investing, in him was investing in him, not the idea. He was amazing and an extraordinary founder. Same thing that goes to almost every one of the investments I've made. The idea was secondary. The founder was everything. 90% of the reason I invest is the founder. The founder is just extraordinary. I read Spider-Man comic books growing up. I was a big Marvel fan. The amazing thing is one of my best investments that paid for my daughter's wedding. And I gave my daughter an unlimited budget for her wedding, and she exceeded it. But one of my largest, greatest exits was Comixology. And the founder was an opera singer from Julia. He was extraordinary and still is. He's got a new startup now, which I invested in again. But I always get tingles, like Spider-Man tingling, read Spider-Man, get Spider-Man tingles. I would always get scared. I would really feel fear around founders that I invest in, because I could feel how capable they are, how smart they are, how special they are. Deborah, did I ask you anything yet, or did you already answer?
No, but I have a question for you. So you said earlier that you should educate the investors. Investors don't want to hear about the technology, but so what are the key points, 5 key points that you would recommend founders educate investors about?
Well, 5. Usually I'm asked 3, or maybe 1 key point, but 5. I have to keep track of that. Well, educate them first about you, about what makes you special. Why would you invest in me, not my company? It's a big mistake when you say invest in my company, because they're not really investing in your company. They're investing in you. And that could be for a whole host of reasons. I'm from Brooklyn. I grew up in Flatbush. I'm a tough guy. Early on, I was smart. enough, I went to Stuyvesant, all that nerdy stuff, so it was always part of, I hate when people say my DNA. So the first thing is they're investing in you. The second thing is their ability to believe in you. So it's the belief point. I've had this idea, and let me tell you why I believe in it. So that's the second connection. So the first connection is you. The second connection is I believe in something. And here's what I believe in. The third is I've already told you, I believe in this and I can execute on this. Fourth reason is because, frankly, the opportunity for an exit is very high. I've analyzed the marketplace. I've looked at the opportunities for who wants product and technology like this, and here's how it's going to work. And five, I guess I have to sort of run around my brain a little bit to come up with the fifth, but let's just stay with the fourth. That's the other thing about the world of startups. Everybody thinks it could offer you advice, right, Joseph? You think you know it all, right? But people like Joseph will really work hard because they know that it's hard to know everything you need to know. So I think being vulnerable might be the fifth one. Say, that's a good question. I really have to study it. I always hate when I'm in a position to give input on presentations and I've only heard or met the person for 3 minutes and it's a little bit of a show business thing. Think about how silly that is. I mean, I've gotten good at it, so to speak, but it's kind of rude to ask somebody after a 3-minute presentation, what do you think? And if they actually give you an answer, because why would you want to take advice from somebody who gives you advice after just 3 minutes? That's obviously not a well-educated person, is it? Right? I'd rather than say, I think I understand what you're saying. I've got about another dozen questions. Maybe I'll have an opportunity to follow up with you. But we make this a transactional relationship, unfortunately, in this world. And it shouldn't be. It should be one of belief, warmth, insight, personal connection, all the things I've shared already. So who else has a good question? And that's another important point. I learned a long time ago, it's not the answers, it's the questions you ask that matter. And you can ask good questions, that's really cool, right, Janice?
I couldn't agree with you more. I have my burning question for you right now is why do investors seem to want to just have I'm getting the feedback of a 10x return while I have a product that's a pretty solid product. Actually, it's a very solid product with a large marketplace. And there's no, in any investment that I do, I have a diverse portfolio. And I'll have some outliers and I'll have some tried and true bonds kind of idea. And I find investors to be like, we're just in this lane and that's all we stay in without, my question for you is, why is there less diversification of portfolios for investors, and why do investors have this desire for a 10x return versus a solid 3 to 5x return?
I'm going to ask the question back at you because the answer might not be as obvious as you think it is, but it is. I've already told you that nobody makes money. So when I come into presentations with lots of investors, I ask in this audience how many people have made money as angel investors, and some hands go up. And then I ask the question, and this is the key one, how many people in this audience have made money over money? And what that means is if you've invested $100,000 and you made some money and you made $10,000 back, you haven't made any money. You're still in the loss category. It turns out, Janice, and for all of you, and this is what you need to know about the angel investors or VCs. Again, they don't make money. So the only way they can is to try and find big exits. That's it. That's it. That's the only reason. It's a really practical, simple, straightforward reason. If you can't produce what their expectation is as a 10 to 20x return, they know they're going to lose money, Heather. They know they're going to lose money, Daniel. Kevin, they're just going to lose money. That's why. It's really that simple. And you say, well, wait a minute, let's get diverse. They can't. The chances of their success is so incredibly low. And that's true. That's truth. That's complete truth. Now, the assumption is that every angel investor VC thinks that way. VCs do more than most. Angels don't because they get connected personally. There's like 5 different types of angel investors. There's the mentor angel investor that you met at a university who gets to know you and is afraid to say no to you, so they invest. Most of them are amateurs, so some of them actually do spend money, and they don't think a lot about the returns. Because to them, as my friend David Rose, wrote a book, the fun is the reason they do it. The fun of angel investing. So maybe you can find more angel investors that like the joy of doing it and don't really think about the losses that they incur. So who haven't I asked the question of?
Sandra, and she posted it in the chat.
Rob Edom, I'm sorry?
Yeah. Yeah, I would be happy to ask a question. So thank you for sharing earlier that talking about exit is so important because I think I never did it, and that was very helpful. My question would be, if the main goal of the company is actually to not being exit focused, but actually to grow over a long period of time and maybe going for an IPO or something, how would you communicate this as an exit in an investor meeting?
You just did. The chances of an IPO are incredibly tiny. So that'll automatically draw, at least from professionals, I'm a professional angel investor, disbelief. Because the chances of you IPOing are just so incredibly low. 90% of exits are M&A, or 95% are M&A, and most of them are under 100 million, or even less. So there's a category, sweet spot, if you're sort of a mathematician at this. You can invest in a company at a sub 10 million valuation, even sub $5 million valuations. And the valuation really does matter to the investor. They want to be able to know that if you want to increase the opportunity to invest in, just lower your valuation. Because the investor knows that has more to do with their exit success, not the exit itself, but with the financial ability to make money at the exit. That has a lot to do with it. So it's not about the IPO. Don't use the IPO word unless you are completely 100% comfortable with it. So I'm not sure if I'm answering your question. I'm trying to remember, was your question about the exit?
Yeah, so it's kind of like I always had this goal to build a company to a IPO level, and I really was convinced that I would do it. But since I had so many investor meetings, and just what you said, that they kind of when they hear something like this, they kind of get suspicious about it. I stopped communicating this and talk about other exit opportunities, right?
Good. Well, it turns out that the larger you get, think about this also. Here's a little bit of wisdom, but it's also statistics. The larger a company gets, the harder it is to exit. Why? Well, first, it's more costly to buy it. And second, there's more competitors all of a sudden. So I don't necessarily think that every company, needs to feel as though they're going to be around forever. Just looking at the S&P, how many of those companies are still there that were there 25 years ago? 10% of them? There's a wonderful book for you to read that a friend of mine wrote. It's called The Limits of Strategy. I love the name of that book. I've always loved the name of that book. The Limits of Strategy. Think about how many companies like DEC. I grew up in the computer industry, and Prime Computers, Wang Computers. These were extraordinary, successful companies, but they're all gone. They're all gone. And at some point in time, every business, pretty much, even if you listen to Bezos when he talks about Amazon, he knows they're going to be usurped by somebody.
He's always said that.
Always said that. And it's true.
Nothing lasts forever.
It's true. So the reality is that an exit is a time and place where you can gain some value for the work that you've put into your work, into your business, and then start working on something new. You don't gain, the medals you gain from being in business longer, I think that's nice, but it's rare. And it's a conversation you would have with your board. Here's the other important point. Make sure that when you do this is a hard one for everybody to grasp because it takes a bit of time to explain it. Angel investors primarily want equity deals, investment opportunities that, and it's actually called a deal. It's a deal term sheet. That's an equity deal term sheet. You're still investment opportunities. I want to make that clear. But when you buy into a company, you want to know what it's worth, what valuation is put on it. You could bite into it. So I can keep going if you want to. I don't know how long, Bonnie, we have. It's already 11 o'clock.
Oh, I'm happy to listen. I don't know.
I've got so much to share.
I know you do. I have to invite you back again, too. It's been a long time.
Well, I miss you.
Me too. I miss Katz's, too.
Katz is.
Brian, can we get to my question before we close out?
You should put it in the chat.
Sandra, is that you?
Yes, Sandra.
I meant to get to Sandra. I knew it was you. Good. You were in control. Good for you. What's your question?
In your experience, what have you seen that's been most overlooked in terms of planning in a startup? What function?
Wow. I would say that, and I kind of mentioned this before, that you think you know it all. There's not enough time in the planning process to really question what you're doing. It turns out that, and I'm not trying to be negative, but your time, Zarin, the time you spend on what you work on, Daniel, Ray, that is precious. And you only realize that more when you get older. Time. So I have a moniker that I use. It's not enough to be smart. It's not enough to be fast. You have to be smart fast. And the issue about being smart fast is that you can't overlook the things that will hurt you. And so you have to keep track of the things that will pull you down and try and mitigate those things. It isn't just a big smile every day. It's knowing the things that hurt and being aware of them. I unfortunately, have a company I invested in who last week said, we have to hurry up and do this. And I said, why? And there was a long silence. He said, because it's important. I said, but if you hurry up, you're going to break things. He says, well, my friends in Silicon Valley said, hurry up and break things. I don't agree with that. I think your brand, your reputation matters. I think you get to solve problems, opportunities, meet with customers. I was a marketing guy. Spend more time with customers. Zoom and the like made it a little bit more different, not difficult, just different, maybe easier in some cases. Knowing what's going inside the customer's head and the things that you wouldn't necessarily know and need to be aware of. Spending more time with customers. So what else? Anything else? Kevin, you've been quiet. I've only seen you in your nice little yellow tie and suit. Kevin, you have something to share? Are you there?
Yes, thanks. I have a question.
Nobody escapes.
Obviously, when you invest into a company, you wish to see a return on your investment. However, sometimes, as an investor, you wish to become an activist. Other than business development and obtaining deals for the startup itself, what can be the most valuable contribution to the startup other than money and business development? If you're an angel or an investor who wishes to contribute time.
Any feedback for me? I really like feedback. No feedback? Founders are always in control, willing to give feedback, but you're not.
It was really great what you talked about. It was really great insights and a lot of stuff that I never really realized. Like I talked to over 100 investors, and there are such like some small things. What you even said about like be the funny guy that people want to talk with. I recognize a very big deflection in being able to close investors since a year ago. And I'm getting so desperate about it that I never had gold meetings again. And now I'm thinking maybe if I would be more positive again in the meetings and be the guy that I was before, it would help a lot. So these small
Absolutely will,
things.
Rob. It will.
Yeah.
Absolutely will. And you're all happy people, right?
Everyone should be smiling.
That's right.
Sure.
Brian, this was awesome. I personally have 2 pages of notes, and I plan to listen to the
Me
recording
too.
again. So thank
You're
you
all
for
good.
your wisdom.
I only want to get better. And your questions and the issues that you bring up are the things that make me better and smarter. And being with you this morning makes me very happy.
And actually, my feedback would be, you know, as a military officer, we'll get briefed when I was in the military. You reminded me of one of my bosses, one of my leaders who would, you know, tell us family is important, love is important, hugs are important, time off is important, strategy, exit strategies is important. So this was really, really extremely refreshing because you don't run into investors or VCs or Ps that give you that type of synergy and vibe.
Very
So
kind.
I really appreciate that.
Makes me want to do this more and more and more. So thank you very much.
Oh, I'll invite you back again. Don't worry.
I'm not worried about you, Bonnie. One thing I never do is worry about Bonnie.
Oh, thank you.
World is better because of Bonnie.
Oh, thank you. Well, I know you're between grandchildren and your multiple homes, but we have to get together soon. One of these days.
One of these days.
One of these days.
You should have a song. One of these days. Okay, everybody.
Thank you.
Have a great one.
Be well.
Thank you.
Well,
Be well.
take care.
Thanks for the insights,
Thanks,
Brian. I'll talk to you
everybody.
soon.
Bye.
Pleasure.
Bye-bye.